Hi everybody. Welcome to a series of study guide videos for exam number 2. Please be sure to download the Excel or PDF version of this study guide so you can work the exercises as you watch these videos. Please remember that you will get the most out of these study guides exercises if you will pause the video as we get to each question. Please do your best to answer each question, then start the video again to see the solution. If you got it right, you'll feel great. If you didn't get it right, that's okay for now. Now is the time to understand and fix your mistakes, so you will not make the same mistakes in the upcoming exam. A detailed analysis of the solution will be provided so you can better understand and fix your errors. Let's get started. There will be a series of questions on Symphony stores. Listed below are year-end account balances in millions of dollars taken from the records of Symphony stores. We have account titles. We've got debit balances and credit balances, and debits do equal credits. So these are good numbers. We can use these numbers. The trick about this, though, is that it's not a true trial balance. In a true trial balance, you would have the debit and credit balances for all of the accounts, but the accounts would be listed in a specific order. It would list assets, followed by liabilities, followed by equity, followed by revenue, followed by expenses. Here, we just have all the debit balance accounts listed first, and all the credit balance accounts listed next. So all the accounts are there that you need, but they are not necessarily listed in the order you would expect on a normal trial balance. So question 1A says, please use these numbers and calculate Symphony's total current assets. So please pause the video, calculate Symphony's total current assets, then start the video again to check your work. Did you calculate total current assets of $823 million? That is the correct answer, calculated as follows. Accounts receivable trade, $730 million, and I'm going to stop mentioning the $1 million. Cash in checking, 34. Interest receivable, 30. Inventory, 16. Petty cash fund, 5. Prepaid rent, 20. Supplies, 8. And less the allowance for uncollectible accounts that is associated with the accounts receivable trade, $20 million. So don't forget that some assets do have a credit balance. As we saw on our homework, the prepaid rent could possibly have been paid for more than a 1-year period of time out from the balance sheet date. And if it was, then part of this prepaid rent would have been classified as long-term. But it's very unusual for a company to pay expenses for more than 1 year in advance. So unless you are told otherwise, you may assume that all prepaid expenses are current assets. Number 1B. What would Symphony report as total assets on its balance sheet? Please pause your video and calculate total assets for Symphony. Then start your video again to check your work. Symphony's total assets is $2,303,000,000, calculated as follows. Their total current assets, taken from our solution to number 1A above, were $823 million. Then the long-term or other assets are building and equipment, $920 million, of course. Land, $150. Notes receivable specified as long-term, $450. Trademark, $40. Less accumulated depreciation of $80. And of course that accumulated depreciation is associated with the building and equipment. Calculating a total assets of $2,303,000,000. Please pause your video to calculate Symphony's current liabilities. Then start the video again to check your work. Symphony's total current liabilities are $695 million, calculated as follows. Accounts payable trade, $560 million. Cash dividends payable, $30. Income taxes payable, $65. Deferred revenues, $40, for a total of $695 million in current liabilities. Now again, in our homework, I think we saw that some deferred revenues could possibly be receipts from customers for more than 1 year's worth of services or sales in advance. But that's very unusual. Customers just simply don't pay for more than a few months' worth of services in advance, if that. So unless you're told differently, you may assume that deferred revenues should be classified as a current liability. Okay, I think it's time to begin another bonus point scavenger hunt. I will give you a few words in some of these study guide videos. Write them down as you run across them. After you have watched all of these study guide videos, you will have written down a question. Send me the question and your answer to the question in a Canvas message before the due date of exam number 2 to earn 5 bonus points. The scavenger hunt words for this video are: what was your? What was your? Okay, back to the questions about Symphony. Please pause the video to calculate Symphony's total liabilities. Then start the video again to check your work. Symphony's total liabilities are $1,495,000,000, calculated as follows. Total current liabilities from the solution we got to question number 1C above, $695 million. Notes payable specified as long-term, $800 million, for a calculated total liabilities of $1,495,000,000. Number 1E. Please pause your video again to calculate Symphony's total shareholders' equity. Then start the video again to check your work. Did you calculate $808 million? That would be common stock at par, $15 million, additional paid-in capital, $485, retained earnings, $308, added together calculates $808 million. And the last of the problem number 1 for Symphony is calculate Symphony's working capital at the end of the year. Please pause your video, do that calculation, then start the video again to check your work. Well, working capital is calculated as current assets minus current liabilities. In earlier question 1 pieces, we already calculated Symphony's current assets and we calculated Symphony's current liabilities, so just subtract the two. Current assets of $823 million minus current liabilities of $695 million equals working capital of $128 million. Well, that's all for this video. See you next time.